Hey everyone, thank you so much for tuning into today's episode of Startups Unedited. Today I am joined by my old friend and Canadian entrepreneur, now venture investor, Brian Wong, who I know you're living, well, you've been traveling quite a bit, Brian. I remember the last time we connected, you were on a tour raising money and you were going all over the world. And just for the folks out there, real quick. So, Brian is a genius. He graduated college at 18 after skipping about 4 grades, I think it was. And we actually met during the early days of his startup, which was one of the largest mobile advertising platforms in the world, because I was involved with launching a business called Mopub, and you raised over $40 million and have just done a plethora of amazing things. Brian, welcome to the show.
Thanks for having me, Jorge. I appreciate it.
Absolutely. Well, for the folks out there, I'll go ahead and tag Brian in the post when we share this so you can dig a little deeper. But let's dig into some of the insights, because you are part of the unique sort of background of investor, that you've actually been in the trenches. You are an entrepreneur, and a lot of us out there are trying to kind of figure out this AI world. And from your perspective, having built companies and now investing in them, how has AI fundamentally changed like venture investing, and how should founders really start to think about how they build companies today? And one other caveat I just wanted to add is, especially in software where you can like vibe code the vast majority of use cases these days.
This is an awesome question. So I'll kind of fill in the blanks too on kind of the fund I have now so that the audience knows the lens at which I'm looking at this stuff through, and then also kind of the advice I'm giving founders. So after Keep was acquired, which was my last company, I ended up starting starting my own angel investing practice called BW Growth Ventures. And then we incubated a bunch of businesses. We actually incubated a crypto cybersecurity business, and we ended up incubating another ads business, a bunch of stuff. And then I decided to start a fund actually last year called ASCII. ASCII for the American Standard Code for Information Interchange, is a precursor to Unicode. It's like a very nerdy reference, but we got the domain ASCII.vc, and I was like, I have to do this. And the premise of the fund is boring tech. And so it's not an AI fund. It's not specifically on something sexy. It's literally intentionally boring tech. AI can be part of it, but the premise of boring tech is something behind the scenes, something hidden, something overlooked, something that just doesn't scream sexy. Is intentionally what we look for. For example, one of the last companies we invested in is called Nexa, NEXXA. They came out of Andreessen Horowitz Speedrun. They do construction and heavy industry AutoCAD automation. So like 3D model automation. So it's a great segue into answering your question around what AI has done to change how founders can build companies, and also venture investing. Venture investing, we just have to be careful because you need to be extremely diligent on the capital efficiency of the early team. Are they being scrappy? Do they realize that half this stuff can be vibe coded? What is vibe codable versus not? Not everything is vibe codable. I mean, let's just be honest. Like, we overplay, I think, how amazing it is because there's still a ton of errors. AI is not perfect. I kind of compare AI to like a very inexperienced first or second year college degree, major in CS, and you still have to check all of the work, and it's being done without a lot of domain expertise. You can train it, but a lot of it's just not the kind of quality that you'll get out of a senior, experienced, well-trained engineer. That being said, when I look at founders, I'm like, are you wasting energy and time? For example, yesterday I took a pitch. The founder was like, we hired an app development firm to make. I'm like, no, why? Why would you do that? That's like strike number one, right? And obviously that conversation didn't go that far. But the idea is knowing that their judgment on where to allocate resources is good. So that's number one. Number two is the kind of exits that the companies are now facing are different, right? You kind of have bigger companies being like, can I just build this? What is even the value? Do I need the entire team? Am I just buying a bunch of prompts essentially? What is the value of this company that I'm buying, this asset I'm buying? So that's a big question that really we don't really actually know the answer to right now, because and that's why venture is being upended. No one actually knows truly what the valuation equation is. It used to be pretty straightforward, right? Like number of employees, tech, revenue. You have multiples on revenue, but what multiples are being completely disrupted. No one knows what a multiple is when two engineers can create something that's like more profitable, generate more revenue than 100 engineers in another company, right? So that's number one. How they're changing how they build their company. Focus on GTM. What's irreplaceable? It's GTM. It's how are you getting your first customers? Do they love you? It's actually now, funnily enough, the non-technical side. It's, are you selling to the right buyer? Does the buyer know your value prop? Are you catering to their industry? And the wedge that we've decided as a fund, though, is extremely vertically GTM'd, is like the English I'm using. It's not really English, but you would understand. It's all buzzwords, but it's like, have you GTM'd so hard that this vertical loves you? Why I love that is the domain expertise is defensible against the generalist LLMs. Every day you hear Claude launching something, OpenAI launching something that might kill another startup, whatever it is. But they're not going to be doing AutoCAD automation for lighting firms. No, that's not. And I'll eat my words if they do. But the point is, and then the lighting firms, who are they going to trust? The person who went deep in, who has the domain expertise, who came from that field, right? Who worked there for 20 years or 15 years or 10 years and is building up this company and like working hand in hand with the companies to build up the AI or the product to help that industry, right? That's the big question. And that's why I think your number one defensibility right now is GTM. And it's making sure you have a deep, deep book of customers.
Awesome. I mean, that certainly speaks to my heart, just given my non-technical background and my focus on brand building and go to market. You said something a little earlier around how you met with a founder yesterday, and there were a couple kind of responses that signaled, you know what, this is not something I'm interested in. As an investor now, and again, the backdrop is that you're not just an investor, you are investing now, but you actually know how to operate an organization. You've launched companies, you've raised tons and tons of money, and have sold a company. Is there any sort of set of signals that you're able to identify, or maybe you have kind of a list of qualifiers when you sit down with a founder that, you know, sort of signals, okay, you know what, this meets the criteria of a founder that I'm interested in working with?
Yeah, it's beyond the baseline, right? So let's talk about like, and this is what I find funny. People always will be like, "Well, I have my, we have a good market, we have a good co-founder. I've built initial MVP. My early advisors and investors are sound. Let's say they got friends and family. We've formed the company as a proper, Delaware C corp or whatever, wherever in the world you are. We've done everything right. Beyond all the baseline hygiene, right? What I'm looking for is coachability. And I've talked about this a lot. There's one very unspoken character trait that I find is universal across all the founders that I've backed that are successful. And that is, do they actually know that they have limits and are able to bring around people to coach them, right? That can help them save time. I think acknowledging that is the number one character trait of success, because it means you can be resourceful. It means you can find the people around you that are better than you at doing it and actually save time in doing it. This comes down to hiring and advisors. The concept of using funny money, aka your stock options, to bring a real expert from a real field to help you is brilliant. And I don't know why people don't do that more. And they're like, oh my God, advisor equity, it's like, blah, blah, blah. They're being cheap about it. I'm like, why are you being cheap about it? Like, if I told you gave 0.05% of the company to somebody and you're now worth, because of their help, $50 million more, would you do it? Of course they would, right? So it's like, you just have to be clever and resourceful. And then the coachability also means you're willing to listen. And it's not that these people are experts or know what they're doing better than you sometimes, at least it's even good to have a second opinion so you know what questions to ask. And it's like, you can't generate all these questions on your own. You
Mm.
have to have people around you that have seen patterns that can help you do it. And that's a big one. I think the other one is, and this is where venture diverges from these programmatic kind of quantitative firms, where there's a lot of now firms I've seen that are like, we use scraping and AI and we source companies and we go on the fucking Crunchbase and we do the thing and we know all the data and it's amazing and we have all this deal. I'm like, oh my God, like, no, like the worst part is making everything too computerized, because the number one thing that a founder and an investor should have is a good relationship. You can't replace that with, oh my God, the numbers look really good or they're hot on the hot score meter on Crunchbase. They have that hype meter now. I'm like, the way that I now source is really, is the personality fit there?
Mm.
And will I want to spend time with this person for the next 5 to 7 years to 10 years of my life? Right? That's really a big one. It's actually almost like getting married too, but it's like speed dating. And the personality fit is actually less about like, oh, am I going to hang out for beers with this person? It's more like, when you're talking, is the energy right?
Mm.
Right? Is this person going to nod and turn around and just backstab you and not understand you? And are they even good people? Do they have a good personality? And then the vetting goes around the corner, goes around to the people that they've worked with in the past. So I do third-party references all the time from people. It's unprompted, right? So I go to people they've worked with and I'm like, hey, how is it working with this person? And it's very quickly obvious if somebody's like a bit toxic, and you kind of just weed them out. So if they got a good head on their shoulders, they're kind, generous, patient, a lot of the baseline stuff, coachable, like I just said, and they have all the hygiene, this is a strong fit, at least for us to consider seriously. And then we dive in and then see other things. And just to help the people listening, the other things we look for is, did you show how aggressive you are in your passion for this company? So again, I'll use this guy as an example again, and I won't name the company, but it was a company that was trying to sell software to bars, at least in his original theory. My feedback to him immediately was, it's, by the way, minus 10 degrees Celsius / 20 something degrees here in New York today. I was like, how many bars did you knock on the door of yesterday? Right? 0, right? I said, that doesn't show me any level of passion, right? And not to be mean, if you really said that this is your customer, how much money does it cost you to walk out of your apartment, go up and down Williamsburg, knock on 30, I guarantee you'll find 30 bars, if any. I want your fingers to be falling off, and I want you to see how many people showed their interest and have them sign your, DocuSign, or not even sign anything, give them your email. I don't even care. Show me some signal that you're being scrappy and you're going through the motions to do the hard work. When I last started this, when we incubated this crypto security company, it was originally a crypto will. We were actually trying to figure out how to get crypto assets to people after they died. You know what I did? I literally went to a funeral directors association conference. People were like, "You're mad." I flew to Nashville to spend 3 days with people who are literally in the death industry, right? And I realized after that this was not an industry I wanted to sell into.
Mm.
But I did the work to figure out what was actually going to happen if we were to actually go into this industry. And this is the type of thing I expect people to do. Like, you can't expect to know the answer to the questions unless you actually are going out there and finding the people who are going to buy your product, or at least your thesis is this group will buy my product, right? So.
I wanted to double click because that resonates pretty deeply with me and just some experiences that I've had. I wanted to double click on this idea of coachability and being able to bring on individuals that maybe don't know everything, because that's unrealistic, but are able to provide feedback and also push back, right, in ways that are really important. And I find that it is a red flag. And by the way, this is hard to tell sometimes, right? But it is a red flag if you're working with someone, and let's say for the folks out there that are adding co-founders or the investors that are in Brian's seat looking at a potential deal, if they don't want to bring on individuals that can hold them accountable, right? I think that's huge. Then I think it's a huge red flag. And I've seen founders that want to bootstrap and these sort of things. They don't want to take outside money, and I get it. Like it is it's not easy at times, right? To have to look in the mirror or be
Yeah.
accountable to, a set of individuals. I get that. But I think the net of it over time is that you end up building a better business. And I think it's healthier also for the founder to be in a situation where you have everything on your shoulders and you got to make all these decisions
You
together,
hit the nail on the head,
or
right?
alone.
This
Very
like, the
difficult.
idea of having people hold you accountable is really why having investors is actually kind of a good idea. Funnily enough, people will shit on investors all the time and say, "Oh, VCs are terrible," and I don't want to deal with shitty VCs. And I'm like, "Well, I'm one. So you're telling me that I'm terrible too? Like, and I used to be a fan. So this is such a closed-minded thing of it's almost like saying like, you're just homogenizing an entire group. I'm not trying to show that I'm personally offended. I'm not really offended. I'm just saying more like it just shows closed-mindedness, and it shows that you're not actually able to spend time to find the good ones. And are you saying that every single VC is bad? You're saying that the guys that helped build up the world's largest companies are all shitty? No, I mean, that's like such a weird thing to say. So for you to be like, well, VCs are terrible and I don't want to deal with it, it just shows you don't want to deal with accountability, and you don't want to deal with having people around the table that actually know how to help you build a business. There's a reason why this mechanism exists. And so actually, a lot of the times I'm spending time with founders that I find early, by the way, coaching them through how to find other investors that aren't shit and the ones that are actually going to add value, and then giving them the telltale signs of what to look for. Right? Like, is the investor willing to roll up their sleeves even in the early days? Are they willing to meet with you? Are they giving you the time of day? Are they easy to reach? Are they responsive? Like basic things like that. And then you ask the other founders that they've backed. Again, references are so easy. This is my favorite thing about references. It takes literally 5 minutes to go ping a dude on LinkedIn who you think worked with this person, and then ask them, "Hey, how was it like?" And 9 times out of 10, they respond, right? They will. And and then they'll be like, "Oh, this, and it's actually really easy. It's either, hell yes, this person is the best person I've ever worked with, or why don't we hop on a call to talk about it? Which means it wasn't good." So,
Totally. And, I wanted to speak to the people shitting on investors stuff. I think that stems from a small sample size of bad experiences, right? Especially if you're a founder who's been out there and you've been rejected plenty of times. I know from I mean, I'm guilty of it, sitting there going, you know what, FVCs, right? I'm gonna, they suck and blah, 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 and all this stuff, right? And that's also, I think, from ignorance of not being able to understand what their world is on their side, right? And the decisions that they have to make, right? They're managing, third party cash. This is not their, I mean, we're talking venture investors, right? Angels potentially a little different, but I think it's also part of that. And that's what I've found, right? So, because if you dig deeper and you start to ask that founder about their past experiences, I can assure you 9 times out of 10, they've had, a lot of rejection and things like that, right? So I think that's where that's come from. And I think in my, older years, I guess now I understand, all sides of this ecosystem, and understand that, we're all humans. And at the end of the day, we have some tough decisions to make, and, we can't really take it personally. And that is one of the most challenging aspects, I think, of actually fundraising as a founder, to really kind of wrap your head around and not take it personally.
I completely agree. And it's also a character signal, right? If someone's mature enough that they're like, well, you're running a business as a VC, I'm running my business. You both have to run our businesses. My rejection of your business is not because I think it's terrible. It's because I don't think it'll get me my return that I want, right? It's a totally different story. And now that I'm on the other side, I completely understand. Like I fully understand, like full circle now, right? And I just remember when I was on the other side, I was like, these guys are just, being closed-minded and mean. And I'm like, they're actually supposed to be closed-minded, meaning they have their thesis that they raised their fund on, that their LPs have backed them on. And if I go to my, it was funny because someone was like, I'm doing this kind of, it's a random business. Like, so you're telling me you want me to go to my LPs and say, I'm going to invest in this thing. Meanwhile, everyone and their mother is talking about, whatever, AI, blah, 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 blah. There needs to be a way for me to tell the story so that it fits into that thesis. So it doesn't look like I'm deviating massively just to do you a favor. I'm not here to throw you money as a favor. I'm here to make money with return. So it's a bit of a different story. And I've learned a lot now being on both sides.
What advice would you give a founder right now who's trying to, let's say a first-time founder who's trying to raise money? And again, for the folks out there, Brian's raised tens of millions of dollars from investors all over the world. So he's a real expert in this. Any tips that you would give those founders in 2026 about raising that initial, set of institutional checks?
I'd say don't go for VCs in your first round. Go for early angels, friends and family, and people you've worked with. This is one thing I find really fascinating. And it's also a signal. If you're telling me you've already exhausted all the people you've ever worked with in your entire life, either in school, if you're young, people you went to school with, your parents' network, your first job out of college, whatever it is, and you still can't raise 250,000 or 300,000 off of that network, it means you lack the ability to leverage your network as small as it is. There's $250,000 everywhere, right? Like I hate to say it, the cafe around the corner costs more to start up, right? So if you can't even raise that, you could max out a couple credit cards and get that amount, right? So like at the end of the day, you can even take a business loan and get that amount. So, and it's unsecured. You could literally get $250,000 unsecured if you wanted to. Like to me, the idea is you have not exhausted everything that is needed, and you haven't signaled that to me. If you're trying to go cold for like a first round, right? It's almost always people that love you and know you and already worked with you. That's lesson number one. Then you use that to be as scrappy as you can to build the success that you can, right? That's, I think the biggest mistake is they go, let me reach out to 40 VCs cold and expect a great threat. No, it's going to take you forever, number one. And two, they're going to want to know you for time anyway. So like if you reach out to them now, you're already expecting to be executing for a year before these guys end up being comfortable enough to invest in you. So you're building a relationship at the end of the day too. And the last thing I'll say is relationship building. It's how consistently are you executing? My favorite founders are the ones that I did meet cold, let's say mutual maybe, and they every month they're like, Brian, I did this and that, I'm doing this. I said I was going to do this. I'm doing this. Or I said I was going to do this. We made a mistake, right? Which is totally fine. We learned from it. Here's what we're doing now. We recovered. Now we're raising this. I'm like, wow, this is amazing. So I really don't like it when someone's like super defensive on their mistakes. Like, well, we made the mistake, but it was still the right idea. That I'm like, that just means you don't know how to let go. And it means that you're trying to like jam a square peg in a round hole, assuming that you're going to end up taking real mistakes in the future and then pretending that they weren't. That's a terrible sign, right? And that's not how you build companies. So those are all things that again are just really kind of red flaggy. Anyway.
Awesome. Brian, thank you so much for being on the show today and sharing your wisdom. If folks wanted to learn more about your fund or maybe follow you on social, I know you're constantly sharing insights. You're a public speaker. I mean, you're really, really helping the startup ecosystem in a variety of different ways. What are the best URLs or channels to reach you?
So if you can figure out my email, you can go to ASCII.vc. It's in binary. Pro tip, not that hard. I'm kidding. I'm not kidding. You can find it in binary. But the best way actually to reach me is LinkedIn. So just find me on LinkedIn, add me, and I usually respond to pretty much every request.
Awesome. And if you love this episode, go ahead and click, comment, share with friends, and tune into the next episode. Have a great day.